I'm trusting you two. Makes me nervous to say that. Anyways, good morning, everybody. Welcome to Loan Officer Breakfast Club. Here we go once again, starting, Kristen.
Now.
Pretty good. Not too bad. I'm going to give you a cheer. Give you a cheer. Not too bad. Not too bad. Well, we're glad to have you guys here every Monday through Friday, 8:30 a.m. to 9 a.m. Eastern time for your free coaching pleasure, because why the heck not, my friends? Why not? Hey, we got Clark Crosby leaving us. That's fine. Whatever, Clark. You know, we were just going to call you out, but, you know, you decided to get up and walk away. So, you know, what? Oh. He didn't give me the finger.
Psych.
He didn't give me the finger, did he?
He needed more coffee.
I can understand that, man. I'm all in when it comes to that. Asa Murray's in the house here. Let's see. Jared Manley, of course. Hey, wait a second. Is that Jim? Yeah, it is. Jimmy Finance did a podcast with Jimmy Finance yesterday.
Jimmy Finance is a cool guy.
He's a super cool cat, man. Yeah, he's got all kinds of cool stuff going on.
I knew the minute he started talking about Nashville and singer-songwriters, you were going to be salivating, and I need to talk to Jimmy. I need to talk to somebody in the biz. I felt it, Frank. I knew where you were going with that.
And you were right. We're already putting slides in this.
Oh my word!
Are already in there. Hilarious.
I am in the business adjacent. I am not in the business. I am adjacent.
But you know, the story's cool, and I'm glad I did the podcast specifically on that because it was neat to see how deep he has driven into the music industry. Like, he's done business with a lot of really amazing musicians, you know, so kind of cool. You know that, Owen? Jimmy
did not. Yeah,
Jimmy Finance, man. He decided he wanted to do loans for musicians, and he just kind of made it happen. And now it's going from one musician to the next. And these are like big shot guys. The guitar player plays for, what's that guy's name? Ed Sheehan or Shahan? What's his name? I don't even know who he is.
Yeah,
some famous guy now. Yeah, the redhead guy, right? Yeah, his guitar player. All kinds of high end musicians. So it's just really a neat story. So there's a podcast, but man, I've got like 4 or 5 stacked up, so I don't know when it's going to get released. So you'll have to wait, but we'll let you all know for sure. Yeah. So all right, well, what's that?
I said it's good to be the king.
It is.
You can get on Frank's show.
Yeah. There's hope for you still, Owen. I'm just kind of still feeling it out a little bit. Just kind of make sure there's some, there might be a quality presentation, that kind of a thing.
Oh boy.
I'm studying up every day.
You're hopeful, which is great.
I'm hopeful.
Heather Lowe, what's going on, Heather Lowe? How are you? I just figured, I don't know, you just stood out to me.
I'm good. How are you?
I'm good. Thanks for asking. I appreciate that. Yeah. Yeah, where are you at right now?
In Maine, right outside.
That's right. We talked to you before, right?
Yes.
Yeah. See, you got one of those faces. You should make sure you get your face out there. It worked for me.
Okay.
Yeah. I don't know. Do the old Facebook ad that Carl White did, where he did nothing but did an ad with just his face. That was it. Had nothing else about nothing, just his face on Facebook.
I'll have to reach out to Carl on that. I should do that.
Yeah. And he did it to a custom audience, just to real estate agents. They would just see his face go through on their feed.
And you have so much better of a face.
Right. Think about what you could do. Way cooler. Yeah. So, all right. I want to go to one more person here. You know what, Owen? I'm going to let you choose. Pick somebody. I want you to pick somebody.
Oh boy.
I just want to hear from somebody else. Like, just hey, maybe go back a page.
Yeah, that's what I'm looking. Let's see. Is my friend Sharon Walford on today?
Oh, she's typically here.
Sometimes she's driving now.
Yeah, sometimes she's driving.
Not here this morning.
No, she's not.
You know who we should talk to? Hey, not to steal your picking thunder there, but you know who we should talk to is Anthony Jones, because of that avatar. I want to see if the avatar speaks.
I admire the avatar every time.
Right. Anthony, hey, what's up?
Yes, the avatar does speak. How you doing?
That's so cool. Hold on. We're going to have to spotlight it just for fun. Just before we get started. All right.
You know what it reminds me of? It reminds me of Wii. Do you know, like the Wii?
Oh, yeah,
game?
the Wii. Yeah.
I feel like we should be playing, I don't know, beach volleyball Wii. Yeah.
Hey, listen, I've got something to say to Anthony, just admiring his avatar here. Yeah. Not many people can pull off the turtleneck on the beach, but Anthony can.
That's true. That's true.
Oh my God.
Yeah. So, hey, tell me about that avatar, man. Is it a Zoom thing, or did you find this somewhere? Or?
It's a Zoom thing in the video portion of it where you can personalize your own avatar to look very similar to yourself.
No kidding.
Yeah.
Huh.
Let me see if I can give you a quick camera shot of myself. My camera's been acting crazy lately, but it's wow, a lead call's coming in. Let's take a look here. Get the avatar.
It looks identical. Yeah, it's identical.
But I'm upside down.
Yeah, you're upside down, and
I don't know how that happened.
This has been really fun. Anyway, so
what a cool cat. I'm sorry, Frank. A lead call's coming in right now. I can't. I love it.
Where are you located, Anthony?
I'm in New York.
No kidding, in New York.
That's why I see the turtleneck. It's 30 degrees out today.
30. All right. Yeah, I thought like nobody did loans in New York. It's like all these lenders have trouble.
I live in New York, but I'm licensed in New Jersey. I do business in New Jersey and Pennsylvania. I've actually, today is Thursday. I took 3 leads this week already, but my niche has been really with investors.
Oh, nice.
I've been working with a lot of investors. So, one investor will refer another one to me and so forth and so on.
Yeah.
I got to take this call. It's my mother. She has a dentist appointment this morning. Mom.
All right. Anthony, thank you so much. That was super fun. All right. Have a great day, man. If you're getting value from this already, go ahead and tap that like button. It helps more loan officers find content that actually makes a difference. And hey, if staying ahead of the market and learning what's really working in our industry matters to you, hit that subscribe button and ring that bell so you don't miss another episode. We read every comment, so drop your thoughts down below. We'd love to hear from you and know what's working or what you'd like us to cover next. Thanks for tuning in, and we'll catch you here next time. All right. Well, that was cool. Just kind of fun to, get things rolling here this morning. But I think it's time for Mr. Who, the big guy who's looking quite dapper as always, Mr. Owen Lee with the mortgage market up.
Morning. Frank, you all right there?
Look at what your course. So I'm just all put together.
Oh boy.
Yeah, I'm here. Am I still here?
Yeah, yes, I think you are still here.
Well, now I am. I don't know.
I'm surprised by this large face of myself on the screen. I startled there for a second. So, good morning, everybody. Well, I wanted to wear some Christmas studs this morning to hopefully kind of soften a little bit of what I'm going to talk about. There you go. But because it's not all fun today, we're going to look at a little bit of a market update, and then we're going to talk about a topic that you're probably going to be hearing a lot about over the next 6 to 12 months at least, and that is the surging credit charges. So anyway, but let's take a look at the market first. Let's kind of jump into the shallow end of the pool. The market has kind of rallied back from the day that, remember, we always talk about these Fed days, right? And when the market doesn't get what it wants, and most importantly, the market usually gets what it wants on that day, but when the forward guidance that the market wants or expects isn't there, then the market can kind of unravel a little bit. And so we saw that with the last Fed meeting towards the end of October. We've got another one where the announcement comes out next week, Wednesday. So I would, as we often talk about, I would bias towards locking because you never know what's going to happen when Jerome Powell gets in front of a microphone. But we're going to take a look at this for a second. We've been getting moderate inflation, right? still in the high twos, 2.8, 2.9, 3, 3.1. It's very stubborn at 3 versus the Fed's benchmark at 2. So that's competing for leaving rates the same, but more people are worried about the job market. And we skipped a report, and then the report that came out was bad, but not as bad as people thought. So it was in a real world, it was seen kind of as a good report, even though I don't think like 115,000 jobs or whatever it was good. But then we had this report come out 2 days ago. Now, this is not a Bureau of Labor Statistics report. This is ADP, the gigantic payroll company, does a survey of private payrolls, and they reported something that you don't often see, and that was a weekly decline in payroll numbers and in the actual month of October, 32,000 down, or excuse me, November, 32,000 down, very weak. So, of course, that creates an expectation for a bad jobs report, which should be coming out this Friday. So we'll see how that goes going into a Fed meeting. But this bad news, okay, it's never good when people lose their job, but this bad news has kind of sparked a little bit of a rally. If we could go to the next slide, Jen. Jen, baby, it's cold outside. My fellow Michigander there, both laboring in about 25 degrees. So this is the last couple of weeks, or really about the last 6 weeks going into this. So you see the last Fed meeting, okay? Remember, down on the chart is up on the actual rate. So you see the last Fed meeting where we were cruising along, 3 cuts to go. Jerome Powell says, no, I don't think you should expect a rate cut. The market tanks. You know, that CME, the kind of betting market, goes down all the way down to 50-50. It went from a 96% chance of another December cut. This is back on October 30th to 50-50. And you can see what that did to the market, right? That made the market go down. Interest rates ticked up. Not a gigantic move, but probably about 65 to 75 basis points, depending upon what bond you're following. Now you can see coming back up as we got tame-ish inflation, no worse anyway, high 2s, as we got jobs report that was moderate. That last little swerve there up at the end was that ADP report, which is kind of buoying the market this week. So we're back up to an 89% chance of the Fed cutting. Bias is still for one more cut in January, but I think Jerome Powell loves to throw a Molotov cocktail into what people's expectations are. So again, I would have a bias towards locking for the next 3 or 4 days, because those Fed announcements are normally okay, and then it starts to tank when he's talking in the news conference afterwards. So I'm sure we'll have some fun next Friday with whatever he says. We'll see if he's going to be a Santa Claus or a Grinch, because this is the season for that. So that's what we've got priced back in. So we're pretty well, you know, within 10, 15 basis points of the best rates we've had in a long time. So things are going well-ish, moderately well, you know, low 6s, high 5s, depending upon where you are. But here's what we've got to really talk about and think about as an industry. Right now, credit report fees, meaning the fees we get charged from Zactus or Lenders One or CIC, or if you're a mortgage broker or a mortgage banker, the company from which you actually buy the credit reports, the tri-merge reports, those fees for 2026 are coming out. And it's not pretty. We are looking at our fourth, count them, 4 years in a row, 2022, 2023, 2024, 2025, of increases really of about 50 to 60%.
Wow.
And so what you're going to see is what your credit charges are, what you pass along to the borrower are going to go up. I think they're going to go up a lot because there's no more room for companies to absorb those kinds of increases. And I think it's particularly hitting the broker community harder because there's less revenue per loan in that community. So they have less ability to absorb the increase. But really, we're at the point where whether you're a broker or a banker, all the absorption is done. The increased prices, it's like you're trying to wipe it up with a already wet paper towel. It's just not absorbing anymore. So those costs are really going to be passed along to the borrower. And if you really look at this, what's happening is a lot of people are beginning to charge up front. I'm seeing these comments in the chat right now. Of people getting charged up front. And, some people did that for a while, but honestly, until 2022, 2023, credit reports were not terribly expensive. But now, after we've had double digit, gone up literally 30 times inflation 4 years in a row, you're starting to see people have no more room for it. So, you're getting people charged up front to pull their credit. You're getting what's called a credit bundling fee. It's going to go up $100 to $150 in a lot of companies. And you are seeing a movement. This is a Housing Wire article where CIC, they're a major reseller of credit. So a company from which you actually buy the reports. You don't buy the report. You buy it from a reseller, almost like a distributor. You don't actually buy it from TransUnion or Experian or Equifax. But they see mortgage brokers are increasingly likely to charge borrowers upfront for credit costs. The brokers that haven't, and quite frankly, the bankers that have it, they think this next charge is going to push a lot of them into that realm. And so, these are just some different comments on that increase. If you want to go to the next slide, Jen, we'll take a look at this. Here's Bob Brooksmith. He's the CEO of the MBA. As all of you know, I'm the chair-elect of the MBA, so I'm the number 2 person there right now. And I think if we just take a look at the statement from the MBA, right? This came out a week ago, or about 2 weeks ago. I was hoping it was April Fool's Day, but it feels more like Groundhog Day. Lenders are receiving their 2026 pricing for credit reports, and once again, costs are skyrocketing. So I'm not going to read the whole post, but if you look at it and you get it and you look at it in the slides, probably 50% of the work that I do at the MBA is now on this issue. And really trying to look for a way to break up the oligopoly, the vice grip that these credit bureaus have on the mortgage market. Because right now you cannot close a loan in America. You cannot close a loan that's sold to Fannie, to Freddie, that's insured by the FHA, the VA, a rural development loan. You can't close a bank loan that's going to stay on the bank's balance sheet without a tri-merge credit report. And as long as that's the case, clearly, I don't mean to be crass, but so apologies, Frank and Carl, and I don't know another way to say this, they're giving us the finger for the 4th year in a row. And so this is going to become a bigger and bigger fight in Washington, D.C. at a time when dozens and dozens of people at your respective companies, tens of thousands of people every single month can't make it to the closing table for want of $1,000 or $2,000. These companies are raising well beyond what's justified.
Hey, Owen, I got a question for you.
Yeah, go ahead, Carl.
Yeah, real question. What are they doing with the money? Because I just curious. I just look up Equifax, their stock report. Well,
Yep.
the market's up 20% this year. They're down 21%. So Equifax stock
hmm
is tanking. I'm sitting here looking at it looks horrible. What what are they doing with the
So
money?
So if you go back and you look at it, they're printing money right now, Carl. But here's what's happening with their stock price. Just like we talk about interest rates, many stock prices are determined by what people's perception of the future is, right?
Mm.
So if you go back and look at these companies, look at what happened to FICO stock on the day that Pulte announced Vantage Score coming out, right? It was, I think it was down 12 or 14% in a day. Somebody can Google it or chat GPT it and check me on that. But that week was a horrible week for that stock. When
Yeah,
FICO
it's
came out,
down. I just checked. So FICO for the year, again, the market's up. I think it was like 18% for the year. FICO is worse than Equifax. They're down 25, almost 26%. Their stock is down.
this is because of the noise that has been created on this issue. The market is onto it, right? They're seeing, and if you go back and look at Experian and Equifax and Trans and read their filings, right? Every quarter they have to make an SEC filing. That filing is open to the public. They brag in those writings about how much money, how much increased money that they're getting from the mortgage industry and borrowers across America. And so, and that's really what's caught the eye of a lot of people. And so when Director Pulte said Vantage Score, now we can talk about this all day long, right? The market wasn't ready for Vantage Score. He made that announcement 6 months ago. All due respect to the director, I'm not aware of a single loan that has been sold with Vantage Score to Fannie and Freddie. And remember, Vantage Score is 90% owned by Experian, Equifax, and TransUnion, right? And so that's why FICO came out and said, well, we're going to sell our score, and we're going to sell our new technology, the FICO 10T technology, and we're going to sell it directly to the mortgage companies. Now, that sounds great, right? Eliminate the middleman, decrease costs. Except those companies, what do Experian, Equifax, and TransUnion do? They aggregate data, right? And we need the data. Just the score alone is not enough. And so that, again, sounds good. I'm hopeful because there's a lot of chum in the water, but nothing yet concrete that can bring these prices down. I think this is going to ultimately get better, but I think it's going to get worse before it gets better. And this is something that we got to pay attention to, got to lock in on. I talk a lot about that Mortgage Action Alliance. I would join the Mortgage Action Alliance. You're going to see the MBA start to take some more aggressive steps in this because the American consumer, the American borrowers had enough. We're finally getting, as we talked about 2 weeks ago, some moderating real estate prices in a good portion of the country. Hopefully the homeowners insurance issue is getting near stabilizing. And now we've got, $100, $150 increase every single year, almost baked into the cost to make the fat cats fatter. So we're going to have to break that vice grip, that chokehold that they have, and get true competition like they have in the credit card industry or the automobile lending industry or a lot of other lending industries where we don't need all three.
So, can you hear me now? Am I okay? Am I back?
You're okay.
Hey, so, Owen, maybe you already, when I was out trying to fix the internet issue I had there, maybe you already brought this up, but why are they doing, is it just a money grab or is there something infrastructure wise that's driving the cost up to them? Are they just passing along an increased cost on their end?
Look, if there is an increased driver of costs for them, they have not been transparent about it. So to the best of my knowledge, and I'm pretty studied on this issue, The answer to that question would be no. What ultimately happened is, so if there are any Shark Tank fans amongst the 300 of us that are on this morning, you know how Mr. Wonderful always loves his royalties, right? So FICO basically made a royalty every time somebody ran a score. So every time somebody would run a tri-merge because someone was thinking about going house hunting, they would make a royalty three times over. And so what happened is they raised that fee because it had been locked in for a long time from like 65 cents to $4.95. And so what's happened, so that's either a $4.30 increase or it's a 900% increase, depending on how you want to look at it. So the individual bureaus had a percentage markup on that. And so this one went up ninefold, and the percentage markup stayed the same. They didn't change what their markup was. And that's what's been responsible for a bulk of the increases. So
Interesting.
Everybody, so you know, this is their multiples of profits are up thousands of percent. So anyway,
Fascinating. Wow.
well, that's what it's like economics. That's what happens when you grant somebody a monopoly and then you don't regulate that monopoly.
We got to figure out how to get in on that.
We need to get a Frank score or something like that.
Some
That's what we
kind of
need.
monopoly.
We need a Frank score. Yeah.
I love the royalty thing too.
Yeah.
I can see Frank channeling his inner Mr. Wonderful right now.
Right. Hey, what's going on next week? Anything?
Kevin O'Leary's got nothing on you, Frank. Right?
Yeah, right. What's going on coming up? Numbers wise or reports wise that we should be looking out for.
So a couple of things. The jobs report is coming out. That'll be November jobs. We're getting back on a regular cadence now that the government's open. So watch that one. And, of course, the big one is the Fed meeting. And, when we look at that slide, right, our cut that we're 89% chance of getting next Wednesday already baked in, right? So the real movement in the market will come based upon what's said at the news conference with Jerome Powell afterwards in the direction of what's going to happen in the next 2 or 3 meetings in the early part of 2026. So whatever you end up doing with your loans, I would have a bias towards locking, and do not plan on locking next Wednesday afternoon. It's December 10th. Will not be a good day to lock unless you do it first thing in the morning.
I mean, he's been kind of sour, a lot lately. So chances are he's going to, even if they do cut, like you said, at the post meeting, whatever, he's probably going to do one of his famous, but I'm not convinced of anything else going forward. I don't think, nothing's guaranteed. And that's all he has to say. And then,
baked in. Oh, yeah.
Yeah.
And, you can get mad at it either way. I can talk about this forever. But the whole purpose, they didn't used to have a press conference. They had a press conference to increase transparency because they wanted the market to know more about what the Fed was thinking. So when the Fed speaks, right, I guess you can't get mad at the information coming out because that's the system that is at work. But I root for lower rates just like every other one of the 300 people on this call every morning, right? I get frustrated when he says things like that. I'm like, come on, why is he such a wet blanket? But
though, there could be a real big opportunity here. I'm just thinking about this, because obviously it's going to be news, like whatever happens, up, down, stays the same, whatever. It's going to be big news. And I always like to throw my marketing on a message that's already out there. Like instead of trying to create a conversation, there's no saying, instead of trying to create a parade, find a parade and then find a cool way to get in front of that parade, right? And so for me, I'm sitting here thinking, I think this would be a great time to double down on like the refi toolkit that we provide, that most of you have, and get ready to pull the trigger on that. So this week we're doing the FSBO book for our realtors, this coming Wednesday. on that same day. But boy, I would definitely get my refi toolkit ready. Like I'd go ahead, I'd preload up the email message. Cause you'd only have to tweak like one or two words in it. If the rates go up or the rates go down, it's just a small little tweak. The message would be the same. And so
Well,
I think I would
There we go.
really,
Sorry about that.
that's all right. I would
I'll just
really,
say, I'll
I'd,
just say this, Carl, that you're right. My dad always used to say the greatest way to lead a parade is to find one that's already going and hop in front of it.
that's it.
And we talk all the time about how the market moves in advance of the Fed, but the general public doesn't really know that. So if you get a 25 basis point cut, why not put that information out there?
You bet.
100% agree. 100% agree.
Hi, thanks for enjoying Loan Officer Breakfast Club here on YouTube. I just wanted to drop in and remind you that if you're a newer loan officer and you're trying to get to that 2 or 3 deals a month, or if you're seasoned and you're trying to get from 50 to 60 or 60 to 80, Mortgage Marketing Animals has you covered. We've got the full gambit from start to finish, top to bottom. Everything you need is at mortgagemarketinganimals.com. There's a reason that mortgagemarketinganimals.com is the #1 mortgage coaching platform in the country. So check it out, mortgagemarketinganimals.com.
And then if it stays the same, I would just give a message of, hey, in anticipation of the cut, we already priced it in. Take action now before they bring it back up to where it should be, kind of thing.
Yeah.
And I'd get my email ready, and I'd get my my phone script ready. And I tell you what, mailers to our past database is a very, very, very high ROI on that. So in conjunction with the phone call, so could be a huge opportunity. I was talking to a guy yesterday. He's in Chattanooga, Tennessee. Really sharp guy. And I think he's 4 years in the business, and I think he said he closed. Gosh, I did a podcast on. I'm sure I'm going to get the number wrong, but it was something like 200 loans or something like that for the year.
Amazing.
Yeah, and a good portion of that is was on refi. It'll be on the podcast here in next few episodes coming out. But even with all this volatility, I talked to a lady. And she was at, and again, this is a round number. She was at like 600, and I got the number written down in my office, but 684 for the year. 684 closings. Yeah, crazy numbers.
Well, the market, it's definitely, you look at the numbers, it's definitely a better year this year, especially better than 24 and 23. Those outcomes are possible, especially for the people that are doing the prospecting. Absolutely.
Yeah, that's it. I think I've been thinking about what my campaign for the first of the year is going to be, or for 2026 in general. And I was on my bike ride this morning. I keep coming up with this thing. It's time to get serious. It's time to get serious. We've all had some fun, and we can still have fun, but it's time to get serious with our marketing and with our prospecting. It's for 4 years we've been waiting for the rates to go back down to the twos. Me too, right? Me too. Waiting for the rates to go back down to the twos. It's time to get serious. It's time to get serious.
That's 2s and 3s are not going to happen absent some pandemic or worldwide macroeconomic event.
Mm-hmm. Yeah. Good stuff. Jody, you have an input or question?
Yeah, just a quick comment. Thanks so much for the FSBO training yesterday. It was really good and good call out for the refi book, and a super great call on the mail. That's an awesome call for book of business. Just a quick baseball reference in reference to the credit increases. So there was a lawsuit. Minor leaguers brought a lawsuit saying they weren't making a living wage, right? Mm-hmm. And because that was my first check was $850 before taxes every 2 weeks. My first year in the minor leagues, mm-hmm. And so we didn't get our hourly rates. So there was a lawsuit, and the minor leaguers won. And so we got a living wage because it wasn't meeting the minimum. So the teams in response said, congratulations, you won. And then they cut 40 minor league teams so that there were just fewer players to pay. And so in the credit bureau world, someone mentioned it in the chat, they're going to lose a bunch of trigger lead revenue next year. Is this just replacement of revenue? And that was my question to Owen and to you, Carl. Thanks.
Jody, for those of you that don't know Jody, he's one of the most interesting guys I've ever met and had the pleasure to talk to. Carl, I met him at your event last July, I think it was, in Detroit. Just an absolute gem. Jody, I would just say that they are going to lose money on trigger leads, but what the increase they're making in credit scores, or I'm sorry, in the credit pulls is far outpacing. So they took 10 steps forward and a step and a half back. So it's definitely replacement of revenue, but it's even more, than what they're giving up.
Mm-hmm. All right. Well, good times. Good.
Hey, Owen, if you had to put money, and I know it's 50-50 and it could change, new information comes out and everything changes. If you're in Vegas and you got to bet one way or the other, what's and I know it's a very educated, but it's still a guesstimate because a lot of reports still coming out. What do you think is going to happen?
Total guesstimate.
Yeah, totally.
Next Wednesday, I think we'll get the 25 basis point cut, and then I think he'll walk to the microphone and do some version of exactly what he did on October 29th or whenever the last meeting was, and just try and tamp down expectations and say it's all going to be data driven. And,
I get it.
I think he's going to do a very similar two-step to what he did last time.
So basically, he's going to throw a loaf of bread out to a starving crowd, and he's going to say, "Don't expect one next tomorrow."
Right.
So that kind of thing.
Yeah. He's
correct.
Poo-poo the whole
Okay.
Yeah.
Very good.
I gave
All
you what
right.
you
Well,
want.
good
this
stuff.
time,
Owen,
but don't
thanks so much,
expect it
man.
again. Yeah. Thanks, everyone.
Good to see you, buddy.
Awesome. Yeah, thank you, brother. Always a pleasure. We're always so happy to have you here. You got such great information. What we'll do, guys, for the slides, all you guys that type slides, you're not getting them, just so you know. Our slide thing's broken for this morning. So, yeah, you're not getting it. But what we'll do is we'll include a link on our email that goes out after the show, and you'll be able to download it from there. We'll make sure that happens. I don't think that's going to be too much trouble. So there you go. So be on the lookout for that email. Also, tomorrow we'll have Chris Johnstone back, of course, and freak us out some more with AI. Today's Thursday, so we got our pre-approved and lookings that we're going to be reaching out to, asking for the business, touch the lead, touch the partner. The text message is always good too. The Thursday text, if you haven't done that in a while, you should do it. Just text the agents that you're doing business with, the ones you want to do business with. Say, hey, if you show anybody property this weekend, need to get them pre-approved, let me do it for you. So it's a good use of your time, right? Very, very effective. And with that, I think we're kind of good to roll. What do you think?
Hey, I just want to, hey, Owen, just thanks so much for doing this. I know it's 8:30 in the morning when you get on. I know you still got your pajama bottoms on, but you got that from the top. You look very professional. And
Scooby-Doo pants.
Yeah. Actually, SpongeBob. I've seen them. I don't want to tell you. There's a story there, but it's SpongeBob. So no, all kidding aside, thanks so much for what you do. I know you put a lot of work in this. We look at this as 4 slides. There's a lot of homework to putting together 4 slides, and
I
we appreciate what you do
very much. I enjoy it.
Well, thank you, buddy.
Thank you for the opportunity.
Yeah. All right.
All right, man. Well, good enough, guys. Let's get out of here. Let's do it all again tomorrow. You guys have a great day. Thanks for joining us. We'll see you then. Adios.
Thanks, guys. Thanks,
Have a great day, everybody.